Hey, everybody. Welcome to the No Shill Zone. Ben, how are you doing today?
Pretty good. How about you?
Nice. I like the haircut, buddy. Good stuff.
Thank you. It's all the Twitter or the YouTube comments now about my haircut.
Nice, man. Very cool. So what's going on this week, man? Let's talk to people about the important stuff going on. And I'll say this: it's not like Bitcoin's really moving much right now.
Yeah, it's kind of interesting because this is fairly consistent with what we've previously seen in a lot of phases of the pre-halving year. Let me share my screen here for a second if I can pull that
Yeah.
up. Yeah, so this is a common complaint I've seen about Bitcoin's price action, its inability to move, even though the S&P is essentially knocking on the door of new highs. This is actually really familiar with what we've previously seen in many past pre-halving years. And I mean, I think it just goes to show that Bitcoin is more so dependent on, say, liquidity and whatnot than perhaps the equity market is. Are you kind of thinking the same thing?
That's what I'm kind of in alignment with, and again, we see the equity markets getting a little choppier. It seems like there's still this float up in the stock market at least, but it's a little bit harder to come by now. Like for instance, today, and I'm just looking at some of my data over here. Meta's down 2, Microsoft's down $2.40, but Nvidia's up a little bit, Apple's up. So there's a little bit more of a mix, and I think that's probably also kind of along the lines of what you're saying here.
Right. Yeah. And I was looking, I'm curious more so what your views are in the short term on the S&P 500, because historically I've seen that in pre-election years, we get some form of a correction. It doesn't necessarily have to be, quote unquote, like the big one, right? Going into a recession, but it could just be a 5 to 10% correction. Do you think there's any TA to sort of back that up, or will it just keep climbing that wall?
No, I do think that there's some sort of back test, right? So if you look historically at charts like this, and we could throw in our SMA, right? Here's our 200 moving average. It's very rare for a market, and this goes, by the way, for crypto. I'm sure you're aware of this in crypto, is that if you look at the distance, the furthest away that it gets from the 200, there's usually a maximum, right? It's kind of like how far can Napoleon travel from his supply lines before things just fall apart and he's not able to continue, and that's ultimately what happened to him. And so I look at the moving averages as being very much the same, and we've had such a run here in the S&P, and if we go to the NASDAQ as well, kind of the same sort of thing is that we're now so extended. I mean, the NASDAQ 200 MA is at 12,000. We're at 14,338. And so even if let's say this is a new bull market in stocks, which I'm not a believer of yet, you still are going to get some sort of back test. You're going to get some sort of pullback, and it should be sooner than later. And the only other thing I would just throw out to everyone is this candle from I think it was Thursday, this big red candle here. All right, that is what's known as an engulfing reversal candle. And notice how engulfing, because it opened above anything in recent history and it closed basically below all these candles here. And as long as we don't take out the high, that's actually a short-term top signal on the S&P 500. Now, there's nothing that says it can't take out that high and then close above it to negate it. But right now, you as a technician, I have to respect that until proven otherwise.
One thing that I keep going back to is people keep telling me like this time is different, with the S&P. But when you look at the seasonality of pre-election years, there's often seasonality by the S&P to climb the wall of worry and to get a correction sometime in the August, September timeframe. Now, I don't know if it's tax related or whatever, but this is like the 2023 year-to-date ROI of the S&P. This is what it looked like in 2019. And I mean, we know that in 2020 we of course had a very brief recession, of course, by the pandemic. And again, we're not suggesting that the yield curve predict the pandemic, but it is interesting how similar things are, right? You have an inverted yield curve in 2019, climb the wall of worry. You have an inverted yield curve in 2023, right? Climb the wall of worry. And this right here is sort of more so my concern for Bitcoin, is because if the S&P gets this seasonal correction, which by the way isn't even just in 2019, like look at 2015, we got a pretty big drop off here, like in the September timeframe, and same thing in 2011, right? A pretty big drop off right around this time, and we can go back and in history and find not every pre-election year, but most pre-election years for the S&P 500, we saw some form of a correction in the August to September timeframe. What I find fascinating, Gareth, though, is that in every pre-halving year, Bitcoin fell below its 20-week SMA in Q3 or the 20-week EMA, right? So like if you look at every example, right? So here's August of 2011, right? So Q3 of 2011, Q3 of 2015 fell below at double bottom, right? And then Q3 of 2019 fell below at ultimately a slightly higher low. And so I look at it today and I'm like, all right, well, we're coming back into that 20-week SMA in that August to September timeframe, just as we always do. I'm sort of the view that if Bitcoin is to fall below this level, what would likely cause it would not be anything necessarily Bitcoin related, but just say a modest 5 to 10% correction on the S&P.
Yeah, and that's been exactly my kind of thesis for why I think Bitcoin and crypto in general is vulnerable, and specifically Bitcoin, because Bitcoin, again, we learned today that the SEC, before they kind of sued Coinbase, they said, hey, can you stop allowing trading in every coin except for Bitcoin? And what that does is it reinforces to me that Bitcoin is probably clear of this regulation. But it means that everything else isn't. But I think, again, what this tells us is that with Bitcoin being somewhat clear of the regulation, well, what can actually take Bitcoin down? And the answer is probably the stock market. That's probably your only big factor, where if you get a panic sell-off or a recession, which causes, let's say, again, and in fact, let me share my screen again. I want to show people this because I think it's important to go to. But basically, if you just look, right, and so I'm going to split my screen in two here so we can kind of take a look at a comparative. If we go to Bitcoin, all right, so here's your Bitcoin, and then here's your NASDAQ chart, but I want to flip to the daily. Okay, so if we zoom out, right, and we go back to the all-time highs on both charts, one thing we see very clearly is that the NASDAQ has had this huge move up to the point where it's only about, I think, 6 or 7% from the all-time highs. But Bitcoin is still hugely far away from the highs. And so now let's just imagine a scenario where maybe we don't even make new lows on the NASDAQ, but let's just say we trade back to the October lows and do a retest. If the NASDAQ falls that much, do people really think that Bitcoin can't at least retest its low here at 15.7, potentially even, think about how far of a dip that would be on the NASDAQ. I mean, what's to say that Bitcoin can't even go lower, maybe retesting 11, 12, 13, or even 10,000. So I don't know your thoughts on that, but it's really, I think when you have the two charts side by side, it's really dramatic, like the difference in how much risk assets in the NASDAQ have seen versus Bitcoin.
Well, one thing to consider, and the only reason I say this is because I lived through it, like the last two pre-halving years, and I just remember seeing, like, this is the basically what you're talking about, except so this is the NASDAQ. The candles are the NASDAQ, and then Bitcoin is sort of this orange line. Look at this. I mean, like in this case, you didn't even have to have the NASDAQ going lower for Bitcoin to fade back down, right? Like, and that's why I look at this and I'm like, well, look, I mean, you had in 2019, we had the NASDAQ, in fact, putting in new highs. And when it was putting in new highs, Bitcoin was in a downtrend, and this is one of those things where it's like, I'm long-term fundamentally bullish on Bitcoin. I have seen this happen many, many times where like the S&P, the NASDAQ push higher, and then Bitcoin just is stuck, right? And it doesn't move. And normally the reason is sort of going back to that idea previously that we've talked about is net liquidity, right? And if net liquidity is not really making a sustained move to the upside, right? Like you can see over here, it wasn't. That's where Bitcoin doesn't really follow the NASDAQ. That's where it doesn't follow the S&P. When Bitcoin follows the S&P is once net liquidity really starts to move higher, and we basically just start printing again. So I think. Yeah.
Along those same lines, would you think like let's say at some point the jobs market cracks and we start to see a decline in jobs, unemployment starts to rise. In theory, that makes it harder for people to invest money, and they have to make a choice, right? All right, so let's say you have $100 to invest. Do you go to the NASDAQ or do you go to cryptocurrency? And I think, again, that kind of lack of liquidity, and right now we're already seeing that, and you're not seeing the jobs market crack yet, although people are kind of spending through their savings from COVID. But I got to imagine that would have a harsher impact on crypto overall.
Well, I think that it's kind of a nuanced view for me because like I think that obviously crypto would get hit if we saw the jobs market really soften up. But here's the thing about, like, if we think about like the altcoin market specifically, right? We know they're very dependent on that excess liquidity to do well. I mean, again, you can see that this is net liquidity. This is the this is total 3, right? I mean, it is tracking fairly closely. I do wonder if when the Fed pivots, right? Eventually they will pivot, and normally when they pivot, it's because stocks are falling, right? If something like that were to happen, then I think that they would start printing, right? They would start printing at some point, assuming once inflation is back down to where it needs to be. Now, at first they might not, but eventually they probably would. I would think that altcoins, like crypto in general, could bottom out fairly early into a recession just because they get hit so hard leading up into it.
That makes sense. Yeah.
So yeah. I mean, like I could see, and the reason why I think that altcoins could bottom out before is because they are more dependent on that liquidity, right? They're not going to be dependent on, okay, what are your profit margins? What's your, what's all this other stuff that we have to talk about with the stock market? All they really need is liquidity.
Yeah, that makes a lot of sense. And that kind of brings me into this next chart I wanted to show, is because, a lot of people are assuming that it's a one and done for rates. Like eventually the Fed will start printing again, which I agree with, but it's a double-edged sword, right? Because if inflation hasn't come down as far as the Fed wants it, or as it was historically over the last 20 years, to me, when I look at this chart of the Fed funds rate, the first thing that jumps out to me is that this is the first time we're really making a higher high on the Fed funds rate since the 80s, right? And so if I look back to 1955, I wonder if like, is this us here? And then we do see that liquidity come, or that the Fed come in and lower rates. But does that then create a higher move in inflation that requires them to raise it again? And notice how you start to get these higher highs culminating. So a lot of people have been saying, oh, this is like the 70s and the 80s. Could this be more like 1955 or 1960? And maybe the next 20 years is actually going to be very problematic. I don't know your thoughts on that.
Well, I've heard a lot of people say, and I even know people personally that have gone out and bought a house because they'll just refinance when rates come back down.
Yeah.
And I'm just like, well, historically, based on the historical record, even 7% is still relatively low for a 30-year fixed. It's astronomically high for millennials who've only known 2 to 3%, or 4%, but for like our parents, I remember when they got a house, there was like a 14%. It was 14% or something, and that was normal. Now prices were the price of houses were a lot lower.
Yeah.
But I look at this stuff and I do wonder, is it one of these periods where we're going into sort of a different regime, right? And it's interesting because those lower highs and lower lows in the Fed funds rate that you're showing right here corresponded to a period where inflation was more or less under control, right? And now that inflation kind of got out of control, now the trend is changing. And I guess the issue is, what happens if inflation does become entrenched, and the Fed is unable to sort of get it out? I'm still of the opinion that Powell will, as he says, I'm still of the opinion that he will stay at it until the job is done. I don't always agree on how he thinks it'll affect things, but I think that they will do what they need to do to get inflation back down to their 2% target, because he's looked at what happened in the 70s and said, I don't want to deal with that again.
Right. So you're in the mindset that he's going to be firm. Like, is there, my big fear with it is that his resolve will quickly shift as soon as we start seeing a significant rise in unemployment. So yeah, I mean, it's easy to have resolve when you have some of the best unemployment numbers in history, frankly.
Right.
But what if, let's just do a hypothetical. What if unemployment is 10% and inflation is starting to inch up a little? Does he still stay hard at it?
So I feel like it probably would, that probably wouldn't happen. So like, if I can, let me just let me show my screen here for a second. So if I were to add on here recessions, so I'm going to add on recessions, and if we were to add on what do I want to add on? Inflation, right? So if we were to add on inflation, and we just look at those two on the same chart, like, the thing about recessions is that they're really good at bringing inflation back down. Right. So I would have to imagine that if we do get something catastrophic like 10%, which I don't really think it'll go to 10%, but if we were to get something catastrophic like 10% unemployment, then on the back of that, I imagine would have to come lower, in like we likely would see rapid disinflation. I mean, like that's ultimately what a lot of these recessions accomplish, is bringing inflation back down. And even Powell has admitted as much multiple times. He said, that a mild recession would help, get inflation back to their target. So I would think that any form of a recession would bring inflation closer to their target.
But what do you think about, I mean, here we have 32 trillion. I think it's like 32.7 trillion now, or by year end, maybe they're estimating 32.7 trillion. How do, so how do we get out of this as a government? And I know I'm asking you to kind of put yourself in like, oh, if I was in Powell's shoes or if I was in the president's shoes, but like the thought process is the only way you get out of debt like this is kind of by printing our way out, which inevitably is inflationary, right? So, let's just fast forward multiple years out. And all right, so we go into a little recession, inflation comes down, but let's say it only comes down to 2.5%. And they print money, and now we go to 10% inflation, and then they raise rates again, and we come back to 3.5%. And then they, like to me, it looks like a very slippery slope where you're just going to get these, much like what we showed in that 55 to 80s period in the US, where the inflation number is going to keep jacking up each time and not coming down quite as low. And then ultimately we know that, again, we can't pay debt 32 trillion at 5% or at 10% or however it goes. That's problematic. I mean, there's just no way around it. So how do we get out of this? Like, what the heck?
I mean, I don't think we do, honestly. I mean,
yeah.
I mean, that's the bull case for Bitcoin long term, right? Is the debasement of fiat currency. Well, something that I think people should also be aware of too when we talk about inflation, like this peak here looks like it's only like 9% or so, but there's this nuance to how inflation was calculated back over here. If you calculate CPI in back over in the 70s the same way we did today, or sorry, if we calculated it today the same way we did back then, we would have already gone up to like that 13 to 14% level. It's just they changed the way they calculated it, and so you could argue that we're already coming off of this peak right here. But I mean, the answer to your question, I don't think we get out of it. I think that they will print money, of course, because the alternative is probably something they don't want to face, right?
Default, essentially.
Right. I would imagine that perhaps they'll try not to print as much, although history shows that that's not really the most likely outcome. I mean, honestly, Gareth, it's a good question. I mean, I do think they will likely print again. I just think I think that Powell is going to want to delay that for as long as he possibly can. And I don't think they're going to be printing this year.
No, I agree with you on that. I mean, I just can't.
Right. Could they start late next year or mid next year? That's possible, right? But I don't see it happening this year.
And I think one of the things that makes me really think it's not going to happen this year is, I mean, just look at oil, right? I mean, oil just continues to rip higher, and for them to print, I think inflation would have to be under 2%. We'd have to be in a recession this year, right? And if you just look at, even though the CPI numbers 3 weeks ago were fantastic, it was a nice drop. Month over month, this is where oil was at the end of last month. It was at $70. We're now at 81.5. So you're starting to have these input costs within the CPI with energy, gasoline, agriculture that are spiking higher. And again, who knows what a TV is doing? I'm not sure where that data is, but at least with the core, which what I thought was, and again, last week we had Jerome Powell speaking, but he said it multiple times that the Fed is most concerned with energy and food because that's what the middle and lower income, people are affected the most by. And I thought that was fascinating because to me, it's a big change from how the Fed used to perform or used to go, where it's like, okay, well, we'll print lots of money because, maybe it jacks up food and energy prices a little bit, but at least the wealthy get wealthier. And then the idea of trickle down economics, which has gone on for, that's been argued for so long, those people will get richer, they'll hire the lower income people and it'll kind of trickle down. I think it's very clear. I don't know if it's administration based with the Democratic administration or it's just Powell's mindset, but he's very, very clear that the core is the most important to him now, which makes sense. To be honest, if you look at the average person, that's what they're spending their money on: food, energy, housing.
Yeah, I mean, speaking, like, so oil. I mean, you have the chart. I mean, I have the chart up too.
Mhm.
Why do you think it is going up this quickly? I mean, is it because? I mean, I haven't. I mean, I think I did see a headline recently, but it seemed like for the first 3 to 4 weeks of this rally, there was legitimately no major headlines
Yeah.
accompanying this rally in oil, which makes it feel a little bit different than, say, the last rally. Do you think that this is the rally that ultimately in oil that maybe pulls recession risk forward because it means that inflation's like going to come back, and then the CME group, they all sort of price in another 50 basis points of rate hikes, and the
Right.
economy finally throws in the towel? Like, is that what we're looking at here? I mean, does oil normally rally into a recession, or what do you think here?
Yeah, so I mean, it is interesting because if I go back to let's go back to our monthly chart, and this is really interesting, right? So what we can see here is look at this. This is so we know that the economy back in the Great Recession kind of topped out in '07, but look at what oil did running into
You're showing my
'08.
screen, by the
Oh,
way.
I apologize. Thank you for letting me know. All right, so here we have the chart of oil going back. This is January of 2007, right? Right here. And if we look at the run, oil had this amazing run higher going into early '08 before having a huge collapse once we got in the midst of it. So you could argue that that's exactly correct in that this push up put so much strain. It was kind of like the straw that broke the camel's back. We already had crazy derivatives and banks were holding dead stuff. And I mean, the housing market was just nuts. It was kind of overinflated. So everything was primed and aligned for a collapse. But then this is kind of what broke the camel's back, if you will. And look at that drop. I mean, to see oil go in a straight line from $147 with no bounces really on the monthly down to $32 is pretty remarkable. And I don't think that necessarily that's what we're seeing yet, but you have to start to just wonder. I mean, here you had a pretty dramatic move. Here's your pullback. Are you going to head back there? And I agree, there hasn't been a lot of headline news. We know that OPEC cut production a couple times, but each time we went lower in oil after a week or so
Right.
before this latest run. And so this is the only thing I can kind of fathom of why oil's been so strong is that we are finally seeing the public, the Federal Reserve, even the politicians saying, hey, it's going to be a soft landing or even no landing where we're just going to reaccelerate. And we've seen GDP numbers be ratcheted up, right? So the concept is maybe with OPEC cutting production and now this expectation of a re-energized economy, maybe that's what's kicking oil to the upside. And then the negative again, which you just brought up, which is fascinating, is that does this end up then forcing us into a recession because oil gets pricier and the Fed can't cut?
Yeah, and actually, I looked after you pulled up '08. I looked back in the dot-com crash, and oil rallied into that as well, right? You can
Yeah.
see here. It, I
Oh,
mean,
yeah.
it rallied up into that 2000 or into the October of 2000, and then it fell going into the recession. So I was just thinking, like, perhaps this rally is due to the fact that we're not in a recession, right? And a lot of people have been pricing in one, and so perhaps it's rallying. But then because of it rallied, right? The cure to high oil prices is high oil prices, right?
Right.
If that comes, it might just ultimately make the inflation problem worse. And then, like, I was wondering if it would then pull recession risk forward. I think one of the common things that we've seen is that, when you get an inverted yield curve, and we talked about this, the Google trends last time, I think, but when you get an inverted yield curve, it makes people think that the recession has to be immediate, right? Like, it has to be right now, and if it doesn't happen now, then it's not happening.
Right.
But history shows us that it's normally at least about a year out after the inversion of the 3-month and the 10-year yield, right? Like, that is something that we have seen over and over and over again. And for people that are unaware, let me just pull it up really quick so that you can see. Like, this is the treasury yield spreads for the 3-month and the 10-year yield. Oftentimes, when they're inverted, that means you're not in a recession, right?
Mhm.
I mean, like, it means that one's going to likely come at the end of the business cycle, right? It's likely the inevitable outcome, but it doesn't mean that you have to be in one right now. And I mean, there is a period over here in the 80s where you can see we were in a recession, even though it was inverted. Also, that was coming out of a period of high inflation. But I would say in general, you can't, Powell can't declare victory on inflation and a soft landing before we get to the resolution of the inverted yield curve. That's sort of my view. agree with that? Do you think
Yeah.
that we could? Okay.
Yeah, so I agree 100% with that. The other thing, and people have asked me this too, right? Because I've been in generally for the last 3 months, I've been pretty bearish. Markets honestly have just continued to go up, and so a lot of people are saying, well, what would make you say, okay, I'm wrong? I'm wrong. This is a bull market. We're just going to go up and go up and go up. And my answer is that because interest rate policy or the Federal Reserve hiking rates has a 6 to 12 month lag, you have to allow for that lag to be completed before you say, okay, there was no recession whatsoever. We're now, let's say, 12 months out from the last rate hike, and therefore, all right, the hike in rates for the first time in history, hiking this much, did not create a recession. And I think that for me is something. So we still have a long way to go, right? I mean, the Fed just raised interest rates last week. And, that's if they don't raise again. But you still have, I mean, if you go back 12 months, where we're in, I don't even know. Do you have that? What was the Fed funds rate 12 months ago?
Let me go grab that. So macro interest, Fed. Well, here's the Fed funds target range. 12 months ago. Well, actually, let me pull up the effective Fed funds rate. So what, July of 2022? Yeah, it was around 1.5% or so.
Yeah. Like, I mean, think about that, people. I mean, that is remarkable. So if let's just say there's a 12-month lag, which is probably the longest lag there would be, which I actually think in this case is valid, because some people will say it's 6. I think it's 12 in this scenario because you have so much stimulus and money in the system. In addition, you also had the banking crisis in March, which the Fed actually did push liquidity back into the system during that period, and they haven't fully withdrawn it yet. So I think that there's a longer lag with more savings from the consumer because of COVID. But I would say, again, I mean, if we were at 1.5% on the Fed funds and where we are now, what, 5.25 to 5.5? I mean, think about that. Is that going to really magically have no impact? I don't know. I think you're right in that saying that people assume it's immediate, and it is not immediate.
Well, look at this. Like, look at the rate hiking cycle from 04 to 06. And then you can see they held the Fed funds rate there for a while, and then it ultimately, the market ultimately collapsed. This has been a faster hiking cycle, but if you were to look at the ROI to low after inversion of the 3-month and the 10-year, and I isolate just today and the financial crisis, it's not any different, right? Like it is the same thing, like so far. And again, I didn't live through this. I mean, I was honestly, I was in high school, when this was going on. I did not care at all about what the S&P 500 was doing. But I look at this and I say, well, and by the way, this yellow dot for people watching, this yellow dot right here that you see, that's when the yield curve became uninverted.
Wow.
So like it really hasn't played out any differently than some of the prior rate hiking cycles we've seen and inverted yield curves that we've seen. And I feel like what it does is it can lull people into a false sense of security to think that, nothing ever bad can happen. Now, that's not to say that you have to just sit on the sidelines for this entire time. I mean, a lot of money has been made. Meta has done really well. Nvidia has done really well. Bitcoin's done really well. A lot of altcoins haven't really done that well, right? I mean, a lot of them are just sitting at lows or near prior lows because I think the macro has, or at least the outlook hasn't been that great and liquidity's been removed. But I mean, here in the financial crisis, you can see, and by the way, if you look at it from the 2-year, 10-year inversion, it looks a little bit different and looks like we're a little bit further along, right? So if you look at it this way, this is the S&P 500 ROI to low after the 2-year and 10-year inverted back during the financial crisis, and also what we're looking at today. So, I know the initial desire would be for a lot of people to say that this time is different and that it won't play out in similar fashion, but I can't help but think that the path to a soft landing is thinking that there's no landing, but the path to a hard landing is thinking that it's a soft landing, right? You don't go to a hard landing without first thinking it's a soft landing.
Right.
So I still have to, I mean, as much as I would love to just join the bandwagon, like I have to look at the context of history and say that there were investors that experienced the exact same thing that we're experiencing today. They probably felt the same way that we felt today. And ultimately, upon the uninversion of the yield curve, that's when the Fed had to pivot, and that's where the stock market fell.
Well, and I think it's important to recognize too, is that one of the things I talked about earlier this week or actually late last week, was that when the Fed came out last Wednesday, Powell basically was like, hey guys, we're not predicting now a recession. Because remember, the Fed had said we were going to have a mild recession. As of last week, the Fed's not predicting a recession. You can go back to a quote, and I would love to find it and show it, but even if I can't do that fast enough, Ben Bernanke in January of 2008 came out and said, guys, it's not looking like we're going to have a recession. And we know what happened. So, I mean, there's this history of over and over again how even Fed chairs kind of get lulled into thinking everything's going to be okay before they're not. And then something breaks or the dam breaks and everything kind of goes crazy.
It is interesting. I mean, I feel like throughout all the ages that we go through, human behavior is the one constant thing, right? It doesn't seem to change. It's markets are fueled by fear and by greed and by thinking this time is different even when it's not. And so I would honestly, like, I would be very surprised if we did not see some type of similar resolution. Now, that doesn't mean that it has to be as major of a crash as what we saw back in the financial crisis. I mean, we've seen historical inflationary bear markets when they finalize can often just be like a slightly lower low, right? Like it could be like 3,400 on the S&P or something, right?
Yeah.
But I mean, it's still something that we have to consider. Hey, we've seen this before. It's not that different from what we've previously seen. It looks like you found the quote.
Yeah, just remarkable. The Fed forecast he summarized called for very slow growth in 2008, but no recession, and that was the good news. The Fed's forecast says the growth could be as low as 1.3% for all of 2008, down sharply from July forecast. So we know that the Fed now said last week that we're still going to have slowing growth, just no recession. So it's very eerily similar. And what I like to show people is like, all right, so let's go back on the S&P chart. I think that was in February of 2008. And I love to show where the markets were at that point, right? Because in February of 2008, where were we? We were right here. And you actually did see a little bit of a move up, but it was kind of like that false sense of security before the waterfall effect happened. And again, this candle right here, this is it right here. So just interesting to kind of throw these things out. And I always love our No Shill Zone because I think we show different sides of things that if you go to CNBC, if you go to Fox Business, even if you log on to crypto, Twitter, whatever it's called now, there's this bull narrative that's always in the underlying thing until panic is so crazy that people just freak out. And I think it's important for people, again, whatever decision they want to make with their investments, that's each of us to make for ourselves, but at least have a full picture of what the data is showing, right?
Right. Yeah, for sure. I think maybe should we go through some of the altcoins that we spoke about last week? I know you had some trades on some of them, and some of them, of course, did get some form of a bounce. So I think maybe we should go back and check in. There was Matic, Cardano, Solana.
Yeah, absolutely. But before we do that, I just want your opinion on one thing. So
Sure.
What's kind of been striking recently, I've been seeing data on how out of favor bonds are, even with interest rates where they are. In fact, bonds are more out of favor now, paying, I don't know, what's a bond paying, 3, 4, 5%, than they were when they were paying 1%, right? Or less, somewhere in that vicinity. And I was just curious about your thoughts on that because, to me, it's like, okay, well, the S&P PE ratio or the return, the payment on it is what, 2%, 3%. In theory, if you can make more on a bond risk-free, essentially, doesn't that make more sense? But the sentiment has swung so strongly to stocks that people are like, I won't go near bonds. In fact, I'd rather be in stocks. And I'm just kind of curious about your thoughts on that.
Yeah, so I've looked into this. So I've been looking into potentially picking up some TLT as sort of like a hedge in case the economy just goes, into the gutter, basically.
Yeah.
But I was looking close. So like history shows, I have the ADA screen up, but history shows that getting bonds as close to a Fed pivot as you can is the ideal time to get them. So I think maybe what's happening is that people, I mean, again, like if you go look at this watch tool, right, and you look at probabilities, like a lot of people don't think we're anywhere close to a pivot right now, right? So I think that's part of the issue is that it kind of feels like a pivot is so far off into the future. And history shows that buying bonds, 12 months ahead of a pivot is probably not the best time to buy. It's normally like, right around the time of the pivot.
Yep.
But here's the thing, Garrett, like this watch tool has been mostly incorrect. If you know, like in terms of predicting what the terminal rate was, think about how many times it repriced what the terminal rate was. Like, I mean, it used to be they thought it was going to stop at like 2% and 3% and 4% and 5%. Now we're all the way up at 5.5%. And of course, they're calling for rate cuts not occurring until March. But there's also this idea, well, you know, what happens if something catastrophic happens tomorrow, right? Like the Fed could theoretically pivot this year. It's not completely out of the question. So I think the reason they're out of favor is because normally when you're in like a hiking cycle like this, where it seems like the economy, I mean, of course, in GDP, I mean, things are fine, but a lot of parts of the economy don't really look that great. Normally they would have already pivoted, right? And so hedging with bonds, I think would normally pay off. But during an inflationary period, I think the Fed's reaction function is quite a bit different than during a non-inflationary period. And therefore, I think people are not hedging with bonds in the same way. And I think I was, in terms of hedging as well, I think I saw that sort of protecting against the downside of the S&P to the 5, in terms of protecting to the downside by 5% is cheaper now than it ever has been.
It is.
Yeah, so I mean, I do think that again, like it's sort of it's lulling people into a false sense of security, thinking that there can't be a correction. As far as TLT, I would argue that things like TLT, this is probably one of the hardest things to navigate right now, in my opinion. I mean, if you look at history, oftentimes the bottoms sort of are like double bottoms before they go back up. So I do wonder if it will fall back down, but I don't really have a great answer. It's something I've looked at for a while. I haven't picked any up yet, but my goal is to try to get some as close to a Fed pivot as I can. I just don't really think there's any reason for them to pivot right now.
Right. Makes sense. And I would just say too, to me, it shows, you know, the more energized and kind of irrational investors get, you know, because remember the weighting of whether you buy a bond and you have a fixed, you know, income amount versus stocks, where yes, you can make a lot more, but you can also lose your money. And to see it so lopsided when interest rates are so high, to me, it tells me that there's this kind of thought process that stocks are just going to continue to go up forever. And it's kind of a no-brainer. And to me, that's a concerning flag. You know, that's a red flag for me when I see that, especially when you could potentially get as much as you can in the bond market right now. But investors want the risk. They want the reward to get the risk. Yeah.
Well, when it does turn, and eventually it will, I mean, it could turn very quickly, because then once people realize, oh wow, the Fed does still know how to pivot, right? Then it of course it could change. But I think the issue is knowing when that's going to happen, and it's going to be very difficult to predict because their reaction function is completely different than what we've seen for the last 40 years.
I agree. All right, let's get into some altcoins here for people out there. Yeah. You want to show one of your charts?
Yeah, I think it's a good idea to sort of wrap it up with some of the discussion on the altcoin market. So, I mean, like I was looking at, so I mean, first of all, there's ADA, which is still getting, you know, more or less rejected here by the 20-week SMA. We haven't really seen anything different. Kind of, to me, again, I know crypto is very cyclical. It still just looks kind of like a repeat of what we saw back over here. We're in the second half of the pre-halving year. Cardano just fades. But I'm curious about this. I want to ask you specifically about. I think there are some similarities between Solana this cycle and ADA last cycle. So like if you look at Solana right now, and I wanna just look at the line chart, right? So if you look at Solana this cycle, what you see is a low, and then you see sort of like a very quick move to the upside, right? Followed by a brief dip and then another push higher, right? That's kind of where Solana is right now. Now, if you were to overlay ADA USD, sorry, let me pull it up on a different chart so we can actually get the full history here. So if you look at ADA USD, we see something very similar, right? You get an initial move higher by ADA USD, you get that pullback going into the sort of the middle part of the pre-halving year. ADA USD then went back up to take out this high, right? It took out that high, but then it eventually swept the lows, right? So it's interesting because first, ADA came down, made everyone think it was going. I know this, Gareth, because I fell for it. You know, back in the day, I sort of fell for this narrative of like, you know, ADA is going to break out here, and it's just going to keep going higher. So, you know, I was buying it all through here, and then I watched it come back down, and then go back up, sweep the highs, but then eventually, after sweeping the highs, guess what happened? It swept the lows before it really moved up. Now look at that chart. and look at Sol USD, right? So it's moved higher here, and it just swept the highs, right? It just swept the highs after getting that sell-off right there, right? And so I'm just wondering, like, is there a case to be made from more of like a TA perspective that Sol could come back down here to where it was back in late 2022? And by the way, with when ADA did it, it took it until the early part of the halving year. And again, I know the issue is like, well, people are going to say it's a black swan, but even if you ignore the black swan, it got pretty close to it by the end of 2019 before the pandemic really had arrived.
Yeah. Yeah, no, I think you're dead on there in that especially, you know, if you see fear to the point where it's affecting Bitcoin, let's say to the downside. I mean, even if we just go back to 20,000, which would not be out of this realm to think, you have to assume that fear is going to hit the altcoins more, right? In general, that's what happens. And just looking at my Solana chart here, you know, you had a very clear resistance level. You pierced it actually in a lot of kind of buying frenzy, but look at the channel. So the channel to me is the first thing I'm kind of paying attention to. So we can connect these highs here, and that gives us that exact high. And then if you connect the lows, that's a perfect parallel line. And what's interesting here is, you know, we did have this big pullback. We got a bounce. Now we're starting to roll over. If we take out this low on Solana, I think you actually head back to this area here. Now, it's not as low as what you're looking at yet. And I say yet because it's obviously not that low. But this would be a potential swing trade. The reason why I like swing trading this level, and again, we'll have to reevaluate if it comes into it. But if you look at this trend line and then this one, they converge. And converging trend lines are like having, you know, I don't know, double the protection, whatever you want to use in that scenario. Now, if it breaks that blue line, that's where I think you're dead on, where you're heading back to that $8 level. So there's this big level first around 16 and change, but ultimately, you know, again, if the stock market decides to take a big dump and it kills Bitcoin, I think you're dead on. I think these altcoins are going to get hit again hard.
Yeah, it's interesting because if you look at the Sol Bitcoin pair, I think the thing to look for is does it hold these lows, right?
Mm-hmm.
It put it a low in over here, it held it over here, and again, like it's crazy to me how many similarities there are. But remember, like ADA Bitcoin did the exact same thing like last cycle, where it put in a low, and then ultimately ADA Bitcoin or ADA USD rolled over in the second half of the pre-halving year, but then ADA Bitcoin held the prior lows, right? So I think what you look for to figure out if Solana is going to be one of those coins that's going to stick around for the next cycle or not is does it hold those lows on its Bitcoin pair? Like look at ADA Bitcoin last cycle. Once it put in these lows, it held those lows on the Bitcoin pair, even during a ADA USD downtrend, which I think a lot of people forget about, right? Like ADA Bitcoin was holding these lows during an ADA USD downtrend. And that gave the signal to me that ADA would likely go put in new highs. This time we haven't necessarily seen ADA Bitcoin bottom out. Like, I mean, maybe, but it hasn't been tested enough to know if that's ultimately the bottom or not, or if it's going to fall back into this 400 Satoshi level. So I was really curious, just your views on this a lot. What about ADA? Like, where do you think ADA is on its USD valuation? What do you think it's most likely to do?
Let's take a look at that. So this is an interesting chart because there's this, and let me just refresh it here. There's this trend line here where if we take that low from June and it connects right through, and we kind of got that cataclysmic pop when the XRP news came out. And then look at how you've come down, but now look at what's happening. You got below that line, and now you're just going under. And notice how it keeps trying to hit it, but it's not getting back above. And to me, that's a bearish indicator, or essentially it's a bear flag. I mean, this is a flag pattern, sideways to slightly up, underneath a resistance line. So this was support when we came into it. Now we're below it. It's now resistance. And so my guess is if we look at this trend line here, so there was this former channel, which we broke above here. We came back above here, and we came here above. My guess is that's where you're headed back to, is right around 27.8, 27 cents. That'll be an interesting opportunity on the long side. Now, if that breaks, guess where you're headed. Now, by the way, interestingly enough, is this line is down sloping. This one's flat, which mirrors kind of this low here from December to this low. eventually these two lines will merge. It might be 6 months from now, but eventually those two lines will merge. Actually, probably wouldn't be 6, maybe 3 months. So
Right.
either way, this is a bearish chart to me that I do think ultimately has a little bit of a dump in it, at minimum back to about 27 cents. But yeah, it's interesting. I was even looking at dominance, the Bitcoin dominance, and it's starting to uptick a little bit again. And you wonder if there's something coming, because we know we talked about Bitcoin dominance a lot, obviously. I know you do too, is that you usually get these pops in Bitcoin dominance, then a retrace before the next pop. And I'm curious if we're getting into that next phase where we see the next pop in Bitcoin dominance.
So normally what happens we see is that we see the dominance go up when Bitcoin goes up, and then the dominance goes up when Bitcoin goes down, right? But we haven't gotten to the point where dominance goes up where Bitcoin goes down when Bitcoin goes down, right? And I keep thinking like it's got to come at some point, like, you know, it hasn't happened yet. This is a chart I've talked a little bit about on my channel over the years. We've talked about sort of like the worst case scenario for the altcoin market, and like this is the Wall Street cheat sheet, you know. And it is fascinating to me just how closely the altcoin market, right, total 3 just continues to follow basically the exact blueprint of the Wall Street cheat sheet, where, you know, it puts in a low, it goes up, it then puts in a lower low, it then puts in sort of like a double top, and then it just sort of slowly fades back down. And what's interesting is how the 50-week is guiding it down again, right? Like the 50-week SMA here is guiding it down. And when you look again, like if you and I mean that chart, right, essentially coming from the idea of the NASDAQ during the dot-com crash, like when you look at that chart, and you look at the NASDAQ during the dot-com crash, again, it was that 50-week moving average right here that ultimately knocked it back down. And you know what's interesting, Gareth, is I look at this chart and I look at it a couple of ways, right? Like if you were to take, say, a range, like a date range, from this sort of rejection right here on sort of the secondary push up after the double top, you get one more push higher. From there, it took about 30 weeks for the NASDAQ to bottom out. Total 3, from where it currently is, like 30 weeks or so from now, would put it out in early 2024, which I find fascinating. It would put it in February 2024, which again is interesting because that's 2 months before the halving, which is exactly when total 3, which is exactly when total 3 bottomed out before the last bull market.
Interesting. So and again, I could be wrong on this, but I'm almost getting like a glimmer of hope from you on the altcoins. And I know you're a hardcore Bitcoin bull, but I mean, is there a point where you time this and start like inching into Cardano, Polygon?
Right.
So yeah,
you know, I get accused of being a Bitcoin maxi all the time. But I'm not. I'm really not. I mean, I in January or February 2022, I just said I'm going to put on my maxi hat for a while because I know that altcoins are going to bleed for the next like 2 years, basically, against Bitcoin, no matter the direction of Bitcoin USD, right? No matter. And it's interesting because if you look at the Bitcoin dominance, excluding stables, right? Look at this chart. Ever since January 2022, it's just been in an uptrend. And I think at some point you're probably going to come back up at the top of this channel, like over 60%, and it might even break out to the upside, get sort of a false breakout. And that I think is where you get altcoins, because like imagine something like this were to happen where like Bitcoin dominance were to go up to this channel. And imagine if it were to break above just temporarily, like a false breakout. It would truly make everyone think that altcoins are never going to recover against Bitcoin, right?
Yeah.
But that historically could probably be a fake out only for it to come back down. Look, the real money that is made in crypto, I'm not naive enough to think that it comes from Bitcoin, right? It comes from the altcoin market, right? You get oversized gains in the altcoin market. It's just that it's so hard for people to know when to get into the altcoin market, because all they do after a major peak is just buy the dip all the way down, you know? Right. And again, like total 3 put in new lows 2 months before the halving last cycle. And that was when a lot of people capitulated, right? When did they capitulate? Right when a recession arrived, right? So like imagine that we go into a recession, let's say early 2024 or something, or late 2023. I don't know when it's going to happen, but let's just say early 2024, like it happened last time. And going back to what you were saying, they're going to print again. Like they're not just, I mean, because the alternative is too scary, right? They're going to eventually print again. And it's when they turn the money printers back on that excess liquidity comes back. And that's where the altcoin market can ultimately thrive. So I do think that the altcoin market is likely getting close to bottoming out against Bitcoin. I still think it needs a little bit longer. Just one last thing on it. Like if you were to, I like to look at this chart, like total 3 minus USDT divided by Bitcoin. So I look at this chart to try to tell me if the altcoin market, not if it's worth the risk against the US dollar, but if it's worth the risk against Bitcoin, right? And to me, I still think the most likely eventual direction is for this to come back down to about point where the altcoin market is 25% of Bitcoin's market cap. And currently it's sitting at about 46% of Bitcoin's market cap. So I think that once you get down to these levels, which I think will probably happen, by the end of this year, early next year, I think that's where the bull case for the altcoin market comes in.
Nice. Yeah, and I think it's important for people just to always remember is that absolutely altcoins can make you a millionaire, but also playing the lottery can make you a millionaire. And so I think it's just, you just have to always remember that there's nothing wrong. And I do this too. I put a little bit of money in for what I call a lottery play. And sometimes it pans out. Most of the time it doesn't. But because I'm risking 1% or 0.5% of my portfolio, it's kind of like, okay, no big deal, because I have my stable assets that just continue to kind of grind up the Bitcoins, if you will. And if you look at like Warren Buffett, right, you have people that have always gravitated towards the safety, but that eventually makes them billionaires. Right. The problem with altcoins is that people get lured in, like you're saying, when the hype is the greatest, when usually price is topping. And then they say, oh, well, it's down 10%. I'm sure it'll go back up. I'll buy more, and down another, and then before you know it, if you look at how many people lost money on altcoins, yes, there's some millionaires made, but I would guarantee 95% of people probably are underwater on their altcoins.
Well, exactly. And the other thing too is like, just because total 3 eventually puts in new highs doesn't mean that the altcoins that anyone that your altcoins put in new highs, right? Right. So like here's a great example, like Dash Bitcoin. Did it ever stop making new lows? No. Like this is going back all the way from December 2017. It never held its lows in a Bitcoin downtrend. And that sort of told you that it was going nowhere in the next bull market, right? So that's what I think we look for. We look for altcoins that are holding their lows against Bitcoin, for the next 6 to 12 months. And then those are the altcoins that will likely go to new highs in the next bull market.
Yeah. So, and just one of the things that I would say is like, that's a great kind of lesson to leave everyone with is look for some of the major altcoins. If Bitcoin, let's say, and again, I don't know if this will happen, but let's say Bitcoin retests 20,000 or 15,700. If it does, look for the altcoins that maybe haven't retested their lows and show essentially relative strength, right? And I think that's a great point to say, okay, well, which ones may be the best runners in that next bull market? Look for that disparity or that divergence.
I can't think of a better way to end it.
Cool, man. Dude, it is always a pleasure. I love Mondays, man. Mondays are great days. Usually I hate Mondays. Mondays are good with the No Shill Zone, man.
Yeah, I think it's a good way to get the week started, just to take a close look at the charts and see what's what.
It is.
But hey guys, if you're not subscribed to Gareth, make sure you go subscribe to him. He's on Twitter. He's got his own website, inthemoneystocks.com. Make sure you check that out. And we'll be here next Monday as well. Although I will be out of town next Monday, so it might be a little bit shorter of a show, but we'll still be here.
Yeah, absolutely. And go check out, go make sure to follow Ben on all the socials, YouTube and Twitter. I don't know if you're on Instagram or any of those other ones. Beware of fakes, guys. There's more and more. In fact, Twitter has just become atrocious, unfortunately, with that stuff. It's pretty bad. So just be really careful. Scams everywhere. I never want to hear, I've actually heard about people that have thought it was me and it's not me, and it's not a good scenario. So just be careful out there. And, honestly, keep your eyes open. Don't put your head in the sand. I think that most people, they tend to want to believe in the positive, which I don't blame them. I mean, it's good to do, but you got to be someone that is logical and reads the data. And that's what we're here to do, guys. So again, make sure to check out Ben's website, and we will see you next week, next Monday, bright and early, 11 a.m. Eastern time. Take care,
guys.